Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Expert on uncertainty and the distinctions to risk is Geoffrey Yu. We're thrilled that he could join us this morning, of course, with BNY Wealth. He is Senior EMEA Strategist. Jeff, how do you identify the uncertainty right now?
Well, it depends which asset class you are asking about, right? So if I look at foreign exchange options, for example, yes, some uncertainty in the front end, judging by implied volatility, but going further down the curve, doesn't look like it, right? So a lot of front end uncertainty, but the market seems to think that stuff will sort itself out. I'm not so sure about that.
So, Geoffrey, I mean, we've been talking about the strength of the U.S. exceptionalism over the last, year, 2 years here, and that's been reflected in a strong dollar. What's the world order look like right now when you look at the currency markets? Where is the opportunity?
Well, the biggest repricing certainly has been in the euro, and I would add, some other low-yielding European exporter currencies, like the Swedish krona, Czech koruna, Swiss franc, for example, Denmark even. They're going to benefit, from any restructuring in the eurozone and a big fiscal push. So that's where the opportunities is. And because the dollar has enjoyed such a large rate differential over these currencies, people are happy to sit on long US dollars and sit on the carry trade. But now with Fed easing being priced back in, clients are not so sure. So these carry trades, these hedges, they are being unwound. So as much as I'd like to call the top in the euro right now, given it's gone against my view, looking at the size of those hedges, I'm still not so certain.
So in the euro here, again, several weeks ago, we saw Germany make a really big pivot there and talk about investing in their infrastructure, investing in their military, suggesting a little bit of a lot of a change in their bias. Is there still upside to the euro? We were trying to get the euro to parity for Tom Keene, but that's not happening.
So, I would that was my target for last year and early this year. And given what the ECB has said as well about inflation, probably not likely to falling back to target in the near future, that is going to be difficult. I still think we end the year below where we are right now, close to 105, rather than 115 or so. The proof will be in the delivery, and this is going to take a long time. But the outlook is positive, and I would concede that.
Geoffrey, I'm hearing from a lot of other people what I'm hearing from you. Somewhere over the horizon, there's a bet that everything calms down. Maybe we normalize and get back to, the stock market gets a bid on it. Everything's fine as well. My problem is I'm reading the Globe and Mail up in Toronto or Le Monde in Paris, and I see massive tariff tension. How do you fold the politics and the Trump politics into your finance analysis?
So going back to your earlier point, yes, it stabilizes, but it won't stabilize at the level that we were at, right? So euro dollar trend stabilization and neutral rates, it's not going to be back at parity. It's not going to be based on growth differentials that we thought were the case in the past. Right. Chinese equity markets, people rendered uninvestable back in the day, not so much in the future. So Canada, what's going to be the nature of the economy? So yes, we will stabilize, but at a different level, subject to the changes that are taking place right now.
Quantify off parity on euro. Is stabilization, I don't want to pin you down here, it's unfair, but is the new parity a 105 or a 110?
So we look at exchange rate in real terms, right? So you look at growth differentials and you look at inflation differentials, it will be higher compared to where we were, because if this works in Europe, and that is a big if, then trend growth will be higher. Why? Because productivity will be higher. The competitiveness that Draghi called for last year, that letter called for last year, that may actually deliver. Demographics will be harder, but if productivity is higher, then trend growth will be higher. And that means a higher real euro.
Paul, should we get Geoff Yu in trouble with compliance today?
Yeah,
let's do it. Geoff Yu, this is way off the remit, but you're so good at this, we're going to ask. Mario Draghi of Italy was a technocrat. Is Mark Carney of Ottawa a technocrat?
So that would be the market characterization, but let's see what else he can do. You can be a technocrat and also a political leader. who says these two are exclusive? And Mario Draghi was a political leader as well. So he led Italy for those 2 years, but of course, under a technocratic mandate. So let's wait for the elections to see what the manifesto from the Liberal Party will be, what kind of a mandate he will run out under. I assume will be quite different compared to what Mario Draghi ran under, but ultimately, can he deliver for the Canadian economy? Can he, a la the German terms, restructure the Canadian economy so that it is less perhaps dependent on two-way trade south of the border? That will be the challenge for him.
Jeffrey, just in a world of that we're all experiencing here over the last couple of months and over the last several weeks in particular, in your world, when you talk to your clients, what are they looking for safety? Are they looking for just opportunities? What are they doing here in this world where nobody seems to know what's going to happen the next minute, the next hour?
So again, those two are not mutually exclusive, right? So some of the safety names potentially are the opportunities as well. So certainly, and we all know, and it's showing up in our flow data, there has been a wide gap in US equity holdings versus the rest of the world. So we anticipated that to converge, maybe not so speedily over the last few weeks or so, but that is happening. So there's a lot of cash on the sidelines right now. Where will that go? Do I put it in Asia with the China theme, the AI theme, or do I go in the Euro reinvestment theme? But China's openly saying there is an inflation issue, a demand issue. So you've got to pick your sectors very, very carefully. So the opportunity and safety, I would add, in the places where it's basically high earnings or high earnings growth potentially, and also less exposure to what's going on right now, and also based on domestic public investment. Those are the sectors I want to be in.
We start strong today on Bloomberg Surveillance. We do it with Geoffrey Yu of BNY. Well, thrilled that he could be with us. We welcome all of you on your commute across the nation, across Canada. Good morning on Apple CarPlay, Android Auto, on YouTube. Paul and I absolutely humbled by the growth out on Bloomberg Podcasts. Subscribe to Bloomberg Podcasts. And, we were just absolutely thrilled by it. In a particular good morning, I just featured Mumbai.
You did?
And the build out here, Ray YouTube, I have an advisor on this.
You do?
They said, Tom, you're such a fossil. You got to have an advisor. So I have Ray YouTube, and Ray YouTube says, India is happening. So good morning, good evening, I should say, in India. Geoffrey Yu with us with BNY Wealth. Jeff, I look at China in the sort of, to me, if I was speaking with President Trump and his fierce advisors, I would say expect the unexpected. And if we export Chinese deflation or massive significant disinflation, are we undergaming where inflation is going to be in 2, 3, 4 years?
So that's where the Chinese growth strategy up ahead is going to be really interesting. I would say, firstly, we're going to be seeing less of China exporting disinflation, right? Because inflation is expected to pick up. But secondly, this fiscal push, the deficit at 4%, where is it going to be concentrated? In the past, it's infrastructure and real estate. It's going to help commodities. That's not going to be the case this time around. Let's help the household, the consumer. If the household consumption picks up, then consumer staples or even the consumer discretionary, those are the areas where we can see reflation as well. This was expected in 2023, 24 when China reopened. Didn't really happen, but now better late than never could that happen. So I would say less deflation for sure, but can it be inflationary? Can it drive earnings upside in global consumer discretionary exposed to China? That is going to be the big challenge.
Jeffrey, I mean, I look at Alibaba as my personal proxy for investor appetite for China.
A stockbroker called out?
It might be, exactly. I kind of just feel like when however Alibaba trades, that's kind of a good proxy for how the world's viewing investment opportunities in China. It's up 60% this year. What's changed in China, if anything, to bring it back to the forefront for maybe investors see as an option here?
Right. So growth, we go back to the growth element, and for companies, what matters, right? Margin. Can there be margin expansion? So can AI deliver the productivity growth and the competitiveness gains that will really boost earnings, via margin expansion? And I think that's what's being priced right now. But I have to pivot back to the household. Ultimately, the final demand has to come from the household, maybe directly from the government, but otherwise, but given these Chinese consumer communication services companies, they really are in every aspect impact of household consumption. So that's where we hope the growth can be. Can it translate in higher earnings and employment? I think that's what the government is hoping for. It's early days after the MPC. So far, there's money on the table. And I would stress participation from international investors is very, very light right now. We're seeing that in our data. We're seeing it in official data as well. So there is an opportunity there in terms of allocations, if you believe in the story.
Geoffrey, when you were at LSE, there was a basic statement on Germany is some form of, to be brought about it, a non-American experiment. All of a sudden, it sounds like they're goosing nominal GDP. Do you actually believe Germany politically, and here's the key word, folks, culturally is ready for a more Anglo-American economy?
Right. I think it is, but let's just say what prompted this cultural change. Was it something out of their own volition or something from outside? I think that is a political debate perhaps worth having. But then again, looking at Europe in general, if it often does respond better to external challenges. And I think we are seeing that play out this time around as well. So yes, there is a change. There is a change, at least in the political culture, in the dynamic. And we're seeing that with Merz.
One final question. What are you hearing from BNY clients?
So BNY clients are, again, looking for opportunities, safe opportunities, as stated earlier. So they are looking at their overall exposures. I wouldn't say there's too much conviction in one direction, or the other, and we're seeing that in our underlying flows right now. But to start off with, certainly we are seeing some dollar positions, some dollar longs being taken off, or they're reducing their hedges on overseas assets is the next step. Mass rotation out of the US into other markets. We're not seeing that yet. Home bias is strong. Take Europe, for example. It's being driven by European investors, not global investors. Will that change? I think that's the asset allocation story for the year.
Geoffrey Yu with BNY. Paul, that's what we call a 7 a.m. call.
Exactly.
On the street. That's
the BNY offices in London, they're about a 5-minute walk from Bloomberg. I think next time Geoffrey can walk over to the Bloomberg. What do you think? Get him in studio and do all that. Yeah, he's right around the corner.
Yeah. Geoffrey Yu, thank you so much getting us started here.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It's a perfect time that if you're out of a job, where do you go? And you go to ZipRecruiter, their chief economist, one of our favorites, Julia Pollak, joins us right now. Julia, at ZipRecruiter, have you seen a change? Can you give us wisdom or perspective on this new job market with so many people so quickly out of work?
It is a slow job market. That is what I'll say about that. There was a big pop in optimism in the fourth quarter. Our first quarter surveys of 2025 are now wrapping up. And what we're finding is that bump has disappeared. Job seekers are saying that in the largest numbers ever, that their job search is going poorly. We have the largest share of job seekers ever with 0 offers. Job seekers have lost confidence that there are plenty of jobs available. So we have the largest share of job seekers ever, over 40%, saying that they're not confident at all that there are jobs available. So our first quarter survey is a somewhat gloomy one, I'd have to say.
And Julia, what do you think has changed here? Is it just some of the uncertainty that a lot of folks in the economy are feeling today as we try to figure out how these tariffs and immigration changes may impact kind of the environment?
So I see a continuation of what was happening before, right? We've had a 2-year slowdown in hiring.
Okay.
And I think that excessive spending, high inflation, high interest rates, they have a very long hangover. And many companies were saying, let's survive till 25. And they were hoping that inflation would be conquered and that interest rates would come back down to normal by 2025. That has not happened. So we still have inflation uncertainty. We still have interest rate uncertainty. And now, in addition, we also have policy uncertainty. So that is the picture.
Bloomberg surveillance folks, they commute across the nation from Julia Pollak's left coast over here to 99.1 FM in Washington, 92.9 FM up in Boston. Good morning, Bloomberg 1130 on a cold spring morning here in New York. On YouTube, subscribe to Bloomberg Podcasts. It's our new way to discover us. Find that again at YouTube. Thank you for Google and YouTube for their support. Julia, when you just give me the litany of how difficult it is to get a job, your job at ZipRecruiter is to pull that over to the unemployment rate. We're having a raging debate. When is the when of, say, 4.8% unemployment? Is the when of that this year, or do you go out further into next year?
So it's possible we won't get there. And that's because we are in the middle of peak 65 with the largest numbers of Americans turning 65 every year, about 5 years of baby boomers aging out like this and becoming eligible for Medicare and for retirement. And then we also have immigration falling steeply. It's one of the first things the president did was sign an executive order ending asylum programs for workers from Afghanistan, Nicaragua, Haiti. So those programs together accounted for about 500,000 immigrant inflows a year. And many of those workers got employment visas right away. That stopped right away. Other kinds of border crossings have stopped. And so the number of people who need to be absorbed by this labor market keeps falling. And so perhaps even with slow hiring, we won't see an uptick in unemployment.
Julia, thank you so much. Julia Pollak, that was riveting, folks. The beginning of that conversation with actually what they're seeing at ZipRecruiter was extraordinary. About
the tone has changed.
I'm going to rephrase. Yeah. The tone has changed. Yeah. And what I saw there, Paul, was if you're out looking for a job, the percentage of people with zero offers.
Yep.
I think, she was going, Julia Pollak fast, but I think that's what I got out of it is, well,
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We went out on this morning of wine and cheese, fromage, and champagne tariffs, and we tried to find someone who's tried every liqueur that Mr. Arnault has at LVMH. Joining us now, Robert Hormats is public service to the nation, just back from Paris, and of course, with all of this history, getting us at least halfway back to McKinley. Ambassador Hormats, thank you for joining us this morning. You got a piece of chalk in your hand. You're up at Tufts. What are you saying to the diplomacy students at Tufts University this morning?
Well, I'm saying basically that the process of reaching some sort of compromise moved a little bit ahead in the last few days in the discussions between the U.S. and Ukraine. But the critical part is that Putin started this war, and Putin is a critical element in reaching a truce and reaching a conclusion, a full peace. And it appears to me that what he is showing us by wearing his military fatigues and his rhetoric is that he does not seem to be willing to do any of the things needed to reach a compromise on the truce or on a peace. And the question is, what is the United States going to do vis-a-vis Putin? We've said the president said he trusted him. He has now demonstrated he's going to do his own thing. He's going to be Catherine the Great and Peter the Great, and a compromise with the United States or Ukraine does not seem to be in his cards, which means there's a major diplomatic problem with him, and we're going to have to address that. There's no way around it.
The distinction here, Paul, for me, is the diplomacy of Hormats or Kissinger or others. There's a lot of silence. There's a lot of quiet. And as Robert Hormats states there, we're at a very verbal diplomacy right now.
It seems like it. Bob, so how do you think this is going to play out over the next several weeks and months as it relates to Ukraine, Russia, and U.S., and I guess not the Europeans?
Well, I had a long talk with the Europeans. That's another diplomatic issue that has to be confronted. The Europeans feel that they have been pushed aside, that they've not been included in the conversations. And the whole history of the United States strategically after World War II has been to work with our allies. The one thing we have that China and Russia both do not have are strong allies. And we're alienating them, and we're putting them, sidelining them. And I think this is going to weaken us in the long run vis-a-vis Putin and vis-a-vis the rest of the world. And very importantly, the confidence in our reliability to support our allies is diminished quite dramatically. All the Europeans I talked to said, can we have confidence in you? And I said, well, we have a history of being with you. And they say, if you're having a fight with your best friend and neighbor, Canada, how can we rely on you to support us, particularly the smaller Estonia, Latvia, Lithuania? Are you just going to toss them to the side? So credibility is on the line here.
Howard Lutnick with us earlier, the Secretary of Commerce, and now Ambassador Hormats with us, of course, always affiliated with the Kissinger Associates. We'll speak with the Ambassador. Jess Menton will get us to the 9 o'clock hour here on these equity markets. Paul?
So, Bob, how should we think about Mr. Putin here? One could argue he could come out of this stronger than ever. And is that something that the Europeans that you spoke with are concerned about?
Yes. I think that we underestimate how bad his economy is at this point and how many people he's lost. The only trouble is he lives in an information bubble. In authoritarian governments, information rarely moves up, particularly bad information. So he may not have a very good idea of actually what's going on the battlefield. And a lot of Russians only get information from state sources. So they may not know, but the economy is in terrible shape. A lot of jobs have been lost. A lot of very good people have left. On the other hand, he does have nuclear weapons. And if we give him a truce, he's using this truce to further extend his power and his devastation in Ukraine. So that the Ukrainians are losing by the truce, even though we've pushed them into it. And we haven't pushed Putin to a very great degree at all. A little more sanctions, but he's going to be the one who's going to have to do this, and we're going to have to come up with a strategy to get him to do it. If he doesn't, then Europe feels even more and more vulnerable.
Your expertise in your wonderful book from over a decade ago is a basic ligature of our domestic economy and our strength as America with our the way we project on a foreign basis. And I don't want to go into, we got Ernie Tedeschi coming up in the next hour from the Yale Budget Lab. I don't want to go into fiscal policy, but this is the arch question I think all of our listeners and viewers want to know. Robert Hormats, on your study of populism. So there was William Jennings Bryan. There was Huey Long in the 1930s, maybe other populists along the way. Do you look at Trump policy, the Trump phenomenon, the Trump foreign policy, tariffs, and what we're talking about here is a one-off that the nation moves beyond after his public service, or is there a new permanence here to the populism of the grand old party?
Well, I think the populism is going to be with us for a period of time because there is income inequity in this country. A lot of people feel left behind by globalization and by technology, and I think you're seeing this in other parts of the world as well, that this is not a one-shot phenomenon. I think this kind of populism is going to be with us, and you're seeing it in Germany with the Alliance for Deutschland that did very well. Sort of very ultra-conservative populism is going to be with us. Did the Washington
consensus, let's be honest, I think I'm part of it. I'm certain Robert Hormats is part of it. Did we blow it because we did not set up a structured labor project like Germany did to protect labor, like they beautifully did in 2008? In America, with a Lockean individualism, said to hell with you down at textile jobs in North Carolina. Did we blow it 20 years ago?
Yes, I think we're under the illusion that there was a Washington consensus in the country when we had the financial crisis, and then when we had COVID, where a lot of people didn't get proper treatment because they were in poorer areas. We underestimated the fact that there was not a good distribution in terms of the benefits of globalization. Many people felt it was disruptive, that technology benefited a lot of people, but a lot of people were not included in this. And when it came to the financial crisis, the bailout was mostly for the banks and a lot of small stores.
Was the stimulus of the pandemic mostly for the banks, as you say it, in a broad sense? Was it for the elite?
I think the pandemic actually, a lot of the stimulus went to other people. I think there was not.
It was a fair distribution.
I think it was relatively fair. There was a lot, and it was not as well monitored as it should have been. But after the financial crisis, the financial institutions were the big beneficiaries. The little guy in Kansas City or in Des Moines didn't feel he was getting his fair shake.
Paul, get one more in here, because I got one more before Hormats storms out of the studio.
Exactly. So, Bob, this is a president, this is an administration that puts America first in seemingly all issues, and a lot of folks support that. Is that how Europeans view it? Do they feel like they are really on their own at this point?
Yes.
Yep.
I think they feel, in part because they themselves became too self-confident. Complacency is, I think, a major problem that we've had over the last 20 or so years. And the Europeans felt they could get their energy, cheap energy, from Russia.
Yep.
The U.S. would protect them from a security point of view. They were, in effect, not really playing the role that they wanted to play in the global system. There's some very talented people there. Macron, I saw a lot of these people when I was over there, but I think the Europeans came to rely too much on the U.S. for their security and didn't do enough, too much on others for energy and didn't do enough. And on technology, they're simply not keeping up with what's going on in the U.S. So they need to, they want to pull themselves together. They know if they want to have a global voice, they have to. And I think now, if there's one thing that's happened, is that they want to do this, but they want to do it with the backing and the support of the United States. They want to be allies in the United States. They don't want to try to do it alone, because they don't think that's good for them or for the global free world.
Okay. I'm upset. I think there's been a horrific job by the media of describing the path that the Rubio family of Miami took to get to this country 2 years before Fidel Castro. His mother going back and forth to Cuba, just trying to get the family out of Cuba, and he growing up with non-citizen parents, I believe, and really being, Rubio is the immigrant. What is your counsel to Rubio as Secretary of State, given this maelstrom?
I think my counsel would be that his family and my family and many families of people we all know came over as immigrants and helped to build this country. And I think that we need to have a fair immigration policy. It can't be helter-skelter as it has been, but there needs to be a recognition that immigrants have been critical and remain critical to this country at all levels, starting companies and doing regular day work that is critical to our growth.
How do you respond to the comments Secretary Rubio should resign?
Oh, I think that's not an answer to anything. I think Rubio is a guy who has been involved on global strategic and foreign policy issues and is a very reasonable choice for that job. I do think, though, that it's important that he have a strong voice, because I think he does, from his time on the Hill and his background, have an understanding of the global system, and I think that's fine. I mean, Trump should have a choice, and Rubio is a very reasonable choice for that job.
This has been hugely beneficial, Ambassador Hormats. Thank you so much. Robert Hormats, of course, with Goldman Sachs International for years, his service under Secretary Clinton to the nation.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Constance Hunter was so good at Economist Intelligence Unit, the EIU, that we're really going to take a fiscal tack here. Constance, the fear that all Americans have, like, am I going to get a Social Security check in 12 years? Or as Heilbronner would have said years ago, the debt and the deficit. Are these legitimate fears that we have about America's fiscal structure?
So this is a really great question about fiscal space and what allows countries to have some countries to have lots of fiscal space like Japan and what allows other countries to have very little fiscal space like Argentina, right? So theoretically, the United States should have quite a bit of fiscal space because we're the reserve currency, because we have deep and liquid capital markets, because we're willing to run trade deficits so we can run financial account surpluses. All that is being turned upside down right now, right? And if I could just say, I saw Secretary Lutnick on TV just a little bit before, and he was talking about $2 trillion of investment coming in. Well, what that means is that we have to have a trade deficit on the other side of that. The financial account and the capital account need to balance. And what does this have to do with the budget deficit? Well, we can, again, only run budget deficits if we're willing to have a financial account surplus, because we're going to need foreigners to invest in our currency, which is a good thing because we're the reserve currency. They want to hold dollars. But if we start to erode that in all sorts of ways, then our fiscal space shrinks.
So what is the risk to this economy, do you think, with what we're seeing coming out of Washington in terms of tariffs, in terms of maybe, I don't know, changes in immigration policy? Is there a risk to this economy stalling, maybe?
I think there is a risk that we hit stall speed, And just to get back to Tom's point, I mean, we do have the debt ceiling coming up this Friday.
Yes, we do.
and so this perpetual situation where we're not are we or aren't we going to fund the government? Will Republicans and Democrats come together? All that at the margin hurts our fiscal space. And then you add all this policy uncertainty. So when I look at policy uncertainty indexes, we're at highs we're still below the highs of the pandemic, but we're at highs we haven't seen in other normal uncertain periods.
You're too young to remember this. Paul's too young to remember this, but I remember the magic of 1992. And it was unique, folks. There's lots of think tanks and that, and somebody with a lot of money like Pete Peterson writes a check. The Concord Coalition, Pete Peterson, Warren Rudman, Paul Tsongas, who we lost way, way too early. And they invented our concern, and they articulated at the Concord Coalition what our concern is over the deficit. And what every listener is saying is, we've heard this like a broken record since 1992. What's different now about a catalyst to actually fix this?
So just as an aside, I worked on the Paul Tsongas presidential campaign because of that, because of his stance on fiscal policy. And I would say that I am definitely of the belief that you want to be spending on the right things that are going to yield growth in the future. And we shouldn't be running 6% budget deficits when we're in expansion.
We're going to do this with Ernie Tedeschi. The variable budget is 14%. I think, Paul, help me with the math here. That means 86% of the budget is untouchable. Is that right, Constance Hunter?
Yes, but I'll tell you, I think that there's ways to think about cutting costs in healthcare, right? And I'm talking using AI, using robotics. There was a great study in Japan, which, as you know, is the preview movie, by the way, for everybody in terms of demographics, fiscal space, everything, right? And so they have all these elderly people in nursing homes. They don't have enough staff to take care of them. And so they started using a number of different types of robotics to help this staff. And it reduced costs and improved outcomes, right? It reduced injury from the nursing staff that was taking care of the patients. It reduced injuries to the patients. And we need to start thinking about how are we going to solve this, right? If you look forward, we need to increase home health aides by 21% over the next decade. Now, these people make half the median wage. I don't see how we're going to do that without increasing wages or using technology to help us.
Interesting. Or maybe some immigration discussions there. I mean,
yeah, but even then, I mean, these are not, yes, that's possible, but this is there's always been resistance to that.
Yep, absolutely. Inflation. How big of a risk is that for you for a resurging inflation risk?
So we think that there obviously will be a step level change up as a result of there will be a step level change up as a result of tariffs. That will intersect with demand, right? So if we have the economy weakening because uncertainty is causing firms to hold back on hiring, or it's causing consumers to hold back on spending, or it's causing firms to hold back on investment, right? If those intersect, right, then those higher prices are going to actually cause a bigger slowdown in demand and prices a year forward.
Constance Hunter, thank you so much, particularly for briefing us out. Well, that's a wonderful vignette there on Paul Sangas as well. Thank you much. With EIU this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Right now in the newspapers, Lisa, what do you have?
Okay, we have a big milestone for an American rock band. Listen up.
Trucking, got my chips cashed in, keep trucking.
Yes, it is the Grateful Dead celebrating their 60th anniversary. So in order to celebrate, they're coming out with a 60 CD box set of live shows. It's offered May 30th, Enjoying the Ride. That's what it's called. So word is Matt Miller already pre-ordered.
I know.
Pre-ordered his
He's
copy.
a crazy fan.
But it represents like 20 shows from 1969 to 1994. 60 hours of music, 450 tracks in all. It's about $600. That's the cost of it if you have a CD player and you want to do that. You can get the downloads, it runs you a little bit cheaper. If you want to go a little bit cheaper, there's a condensed version on CD and vinyl too. But it's the way for them to celebrate 60 years.
I can't convey the bootlegism of 1970, 1971. You go to the Sink or Tulagis and try to get through the day, and then you knew you needed something to get back to the dorm. So you'd go in, everything was white. It was like cheap white cardboard. And you go in and bootleg stuff. And the only one I know left who has a complete 1971 bootleg catalog is Doug Cass. No one else. My mother threw them out. What? These smell like something. What is that? And we say good morning to Doug Cass, who has all his original bootlegs.
Yeah.
I love it. But yes, Matt Miller was very excited about it.
He's fired up.
He came to me this morning. Yes, he did. So, this next one. So this is from the Wall Street Journal. LVMH has named Bernardo Arnault's son to lead Italian fashion house Loro Piana. So this is an interesting setup because he's 30 years old. We're talking about Frédéric Arnault. He's worked in LVMH's watch division since 2017. He was a CEO 3 years later at 25. Yep. So Loro Piana, it sells about $2,000 sweaters and coats, but it's part of that fashion and leather goods section, which is huge for the company. So a lot of people are saying it's kind of setting him up to be the next in line. I mean, people are watching the careers of his 5 kids very closely. So they're saying this is like a big move and some big news.
I mean, it's got a 300 billion euro market cap. It's a big company. Holy cow.
It's a big company. It's been a huge success. I remember the day, I believe they took out a part of Loro Piana, and that was, in my mind, as an amateur, the first luxury transaction where everybody just stopped and said, "Are you kidding me?" And now, 20 years later, 30 years later, here's where we are. So he's anointed to be the one of the X number of kids.
Sure, why not?
That's what people are saying.
Good for him.
But we shall see. There's 5
the
kids
drama
to go
will
for.
continue.
Yes,
Succession.
exactly. Succession.
They won't. I called up Frederick's people. I said, can you come on surveillance? And they said, we're not, because you call it Louis Vuitton. I said, well, that's how I pronounce it.
That's how we do it every day. Okay, so the newest cruise offering is now on dry land. These are like Royal Caribbean. They bought a 17-acre piece of land on the Bahamas. So it comes with everything, but they're saying this is the new trend to go from, the dry land private beach clubs. But what the the New York Times is saying is that there's some kind of backlash behind it because the people on the island are saying that they're tired of being priced out by foreign investors. It's taking away from local economy. So that's kind of the word and the banter back.
Quickly, we go to surveillance correspondent, cruise correspondent, Richard Truman. Richard, would you go on a cruise ship that was on land? He's going to Europe. He's doing
cruising Europe?
Yeah, you pick it up in Gibraltar.
Oh, okay.
And you go over past Malta and all that, and you end up on Cyprus, and then you pop up to Istanbul, and you come back.
All right.
Rich Schumann, thank you for that wisdom.
okay.
Lisa Mateo, thank you.
Yes.
It is the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.